He knows that I have no problem telling someone they're wrong. We live in an era of fraud in America, not just in banking, but in government, education, religion, food, even baseball. I thought we were better than this. I really did.
Believe that policy is well positioned. As always, we are prepared to adjust policy as appropriate to achieve our goals. That brings me to a concluding word on the path ahead for monetary policy. The committee remains steadfast in our oft-expressed commitment to support the economy for as long as is needed to achieve a full recovery. The changes we made last year to our monetary policy framework are well suited to address today's challenges. We have said that we would continue our asset purchases at the current pace until we see substantial further progress toward our maximum employment and price stability goals, measured since last December when we first articulated this guidance.
Here, as today we had a big miss in ADP employment numbers. So ADP non-farm employment change missed, came in at 374,000 as opposed to 613,000. So as September seems to be the stock market's worst month of the year due to back to school spending and pretty much consumers getting ready for their kids to go back to school, and obviously as the remaining time that we have left of summer is winding down, markets kind of fall off around this time. And then we have the White House wants to start fixing the housing shortage, which supposedly certain agencies are able to deliver about 100,000 affordable housing units over the next 3 years, according to the Barron's article, which is actually going to be somewhat crazy because as rent inflation is rising, that cost to live in the affordable housing is going to cost more than it will be today. So don't let that fool you as the future time value of money with inflation that is going to actually be worse than what's anticipated due to the fact if people are not working, how much they're getting paid, and what is going on in that point in time, as well as the OPEC, um, the Organization of Petroleum Exporting Countries. For you don't know, they met today and they are expecting to stick to their plan of output increase of oil. So they're looking to increase oil demand by 4.2 million in 2022, and that's up from the previous forecast of about 3.28 million. So oil prices have rose in the last 10 days about 10%, notably because of the natural event that is happening, and that is Hurricane Ida. So that is something to look for as oil's demand starts to become more popular and heat up as this hurricane makes its rounds through the US. This could significantly increase the price of oil and gas because of that supply now, since Hurricane Ida has shut down a lot of plants. So while we're dealing with Hurricane Ida, Google and Facebook are dealing with Elizabeth Warren and others, as there is a so-called letter that pretty much secures or allegedly secures Google's dominance in the online advertising industry between the two. And coincidentally, Google shares are up 0.4% today, while Facebook was down 0.7%. So let's see where this goes and if these reports are pretty accurate. So let's get into the payroll report. Alright, so like I already said, ADP's job report increased only by 374,000 as opposed to 613,000. Big miss. And let's break it down by company size and sector. So you could see that pretty much the medium-sized businesses took the cake for the most increase in jobs, while when it comes to the sector, leisure and hospitality came in the top sector, followed by education and health services. So that's interesting to me. And also the miss on the jobs report, right? Now, there's 2 or 3 ways to go about it. One, people are getting overworked, so they're either quitting or they don't want to go back to work yet because it's Labor Day weekend coming up. And then unemployment benefits actually go away after this weekend. So that's one option. 2, the Delta variant is really causing people to be cautious about going back to work, possibly, or just pretty much going to work. Some people might be very um, cautious and picky when it comes to a job. They might only want to work remote, and that's their preference. And then the third one is all these mandatory or mandated vaccine mandates are starting to become more and more of a reality throughout the country. And as more and more companies do this, are we going to see an increase in the vaccination rate, or are we going to see an increase in job openings, unemployment data, and so forth? So that's where my mindset is with this, because I find that extremely interesting as the medium sized businesses increased by 149,000. So we shall see when the next ADP report comes out, because things could get pretty bad since unemployment benefits are starting. But then again, who am I? I don't know anything. I'm just here trying to spread information, education on how to navigate your investments on financial education. So let's get into the technicals. All right, so Dow's down about 4 points. S&P is up about 2.75 points, as well as the Nasdaq is up about 18.25 points in the after hours on September 1st. So let's get into options. So some unusual options activity today that I saw. Now you have MasterCard, Netflix, Lucid, ABBV, Wells Fargo, and Amazon. So what's interesting to me is the expiration date on the MasterCard one, which is MA. The fact that that's out in November, that is telling me that there is a possibility that someone knows something that we might not know. So I'm going to keep my eyes out on MasterCard, as they did come out and actually state that back to school sales throughout America are expected to grow 6.7% from 2019 levels and about 5.5% from last year's numbers to this year. So if that is true, there could be a lot of money to be made in the short term while back to school spending is increasing. And obviously the price of goods are higher, so let's see how well that really turns out in the near term. Next, we have the most active options. Most active options were Apple, BBG, BAC, Bank of America, AMC movie theaters, Tesla, Amazon, Alibaba, as well as Neo. So Alibaba actually finished up about 6.29 points higher, as well as Amazon. And then Apple, BBIG also finished in the green, and all the others finished in the red. So another thing to keep on lookout for is the total put to call ratio. Now it's under 1, still bullish, but as you can see from the 52-week high, it's kind of getting back up there as the index put to call ratio keeps on flirting with the 1.81 to about like 1.67, and the equity put to call ratio is extremely bullish as there's just absurd movements in small cap stocks recently, and that's triggered by these momentum traders in Wall Street Bets and Robinhood and Webull, all these other platforms that are coming out to be pretty much socialized, making a big impact on small cap stocks that pretty much have high short interest, and some retailers are taking advantage of it. So who knows how long that this could be stabled for, but definitely going to be looking out for some flashing signals in the near term as earnings. Today we had Chewy, CharPoint, C3AI, Five Below, and Asana. I pointed those out this morning as Chewy, I believe, came in below expectations of earnings, and ChargePoint sales have signaled growth and some serious potential in that stock. And Five Below and Asana I did not pay attention to, but I do know C3IA has definitely dropped in the after hours market after they announced earnings. So tomorrow for earnings, really not looking at much. I mean, I'm going to pay attention to it, see who came out with good Q2 earnings to see where in the near to long term we could end up. I'll probably look at DocuSign and Broadcom, but other than that, I'm not really looking for any earnings tomorrow. So let's get into the technicals. So here's the heat map with real estate leading the way today, up 0.79%. As you see some of the big tech names out there in the lead. As you will see flashes of green from the COVID plays in terms of J&J, Moderna. Moderna actually came out and said that they are going forward with their booster preliminary trial. So we'll see what happens in the near term with that, as well as Wells Fargo getting into some trouble in the financial sector. As you could see, banks really pulled back, or financials pulled back today. So that is something I'm going to keep my eyes out on, as there could be, or if not already happened, another rotation in the market. As you could see, industrials coming back down, as energy, materials, as well as some IT plays. So definitely going to be looking at that. Now let's take a look at the Dow, S&P, and triple Qs. Alright, so here's the Dow Industrial Jones Average, where we're looking at the 15-minute, 4-hour, daily, weekly, and monthly time frame. So today's price action, we came up right to yesterday's high, saw resistance, and came right back down, consolidating at that lower range, and nothing really in after hours. As we move out to the 4-hour time frame, we see that the Dow is trying to recapture that 200-day moving average, as when we zoom out from the daily and the weekly, we see that it is flirting with that 20-day moving average on the weekly, but as we zoom out even further on the monthly, it's pretty far away from that line, as it just looks like a never-ending escalator upwards, because it hasn't seen a steep decline in how long? Since 2020, since COVID. It just has gone upwards. And I mean, from June to July was its first real big pullback, if you think about it. I mean, there was one in October and one in January, but other than that, it has had quite a run here. And so this is something that I'm looking forward to um, a lot, just because as the weekly time frame, if we dip down below that 20-day average, we're going to look to um, test the 50-day moving average. And then the daily, right, as we zoom in, the daily is flirting with the 50-day moving average, as it already was trading below it on the daily chart, and now it's looking to recapture it. So do we see the Dow reach all-time highs again? Are we going to see that rotation play into effect soon? Who knows? Not really sure, but that's my opinion and take on that. So let's go into the S&P. So same thing with the S&P, right? Now we look at the daily chart of the 15-minute time frame, right? The intraday chart, sorry. You can see we're flirting with all-time highs here, as there's definitely some solid resistance at that level, as we just dropped down to yesterday's close and open during the last 20 minutes of trading time, 30 minutes of trading time. So that's interesting, as who knows what tomorrow will have in store when economic data comes out. But like I previously mentioned in the SPY, we always see a dip around the 19th, the 17th, 18th, and 19th, the past few months. So I'm looking for this trend to continue as we keep on touching and testing the 200-day moving average here on the 4-hour time frame, which is showing some strong support there. But as we zoom out, we're actually testing the 50-day moving average on the same time periods, right? Just a different time frame. So the fact we're hitting the 50-day moving average on the daily is showing some signals of strength in the bullish run here that we are having, as well as we look at the weekly. You see we're just touching the 20-day moving average on any drop, which is absolutely insane. So on the weekly time frame, we are showing no signs of slowing down, even though the RSI is overextended, as well as the monthly time frame. Now, we just started off September in the red. That could change come tomorrow, but look at all these months. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So since we recaptured the drop in February of 2020 or March 2020, wherever you want to call it, there has been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green candles, that probably more all-time highs in 2021. So that just shows how miraculous this recovery was, because this is an insane run up here on the monthly time frame, because how long can that stay consistent and stable for? You see that these candles are very light here. So that's something that I will definitely be paying close attention, as we get closer and closer to the FOMC meeting. So last, I just want to go over the NASDAQ real quick before I touch upon two stocks. So let's start with the intraday time frame. So 15-minute candle, you see we're stair stepping upwards, right? And we did hit an all-time high today of 15,696.42. We didn't close at that, but that is an all-time high that we hit. And we come down to test yesterday's closed. So showing some support at that level, as well as the 4-hour. Just seems that we're just going upwards, as we did touch the 50-day moving average, and then we just sprung upwards. And right now, I mean, this is the same thing. This goes back to the 17th, 18th, and 19th, where we see a pullback in the market, and then it continues upwards and reaching all-time highs again. So this is something to keep your eyes out for, as the RSI is overextended on each of these charts, which can be very dangerous if you're looking to get into certain plays. So be mindful of that, because tomorrow we could have a pullback depending on the data. As you can see, the monthly time frame, the RSI has been overextended for quite some time, but you know what, it doesn't matter, because we're pushing all-time highs. So as long as the options market are fueling these stocks, and some of them are small caps, some of them are big caps, and to be honest, it's these individual options that are driving these stocks upwards and pushing the indexes upwards. So as we get to the weekly, the same thing. We're just riding that 20-day moving average, and then the daily, we've touched the 50-day and the 20-day. We thought about crossing over back in May, but we didn't. And then we just broke out into an upwards trend to all-time highs day after day, week after week. So tomorrow, depending on this data we have coming out tomorrow, which is pretty much initial jobless claims, continuing jobless claims, natural gas storage, factory orders, that is going to maybe affect the markets. I don't know. Today I thought maybe that ADP number would affect the markets, but it didn't have that much of an impact. Now it could be because the markets know nothing's going to happen until we've reached substantial further progress, like Powell keeps on saying. So until we get to that point, I don't see the markets reacting in a very vicious downwards pullback. Maybe we see something like we've been every 17th, 18th, and 19th. So I'm going to be harping on that every video as we get closer and closer to that time period this month. And now what I would like to go into is a stock that I think could be a very great opportunity. Now, Hyzon Motors. So Hyzon Motors actually just came out today, I believe, about a partnership with SoCal Gas into decarbonizing their electric trucks. And as you could see, looking at the monthly time frame, Back in, what is this, December 20, this is where I PETO'd, and it hit a high of $19.95 in February. Since then, it's been downwards declining. And then as we're looking at the weekly time frame, right, we we've hit an all-time low of $6.02, and so this is our strong support area for right now. As we're making our way back up, we cross over that, what is that, that $9 and some I cent fib line, the 78.6% line, and we are pushing upwards to that resistance level, trying to recapture that 50 or 20-day moving average, excuse me, at $10.47. Now this is a key level. As we'll zoom in on the daily time frame, you could see we're actually almost there, pushing upwards, as we need to break over this to signal a bullish trend upwards longer. Now, I'm looking for us to retest that like $10.38 line and maybe have a pullback to the $9.16, or maybe just a slight pullback to the low, like $9.25. And if that does happen, I will be buying if it signals a strong move or strong bounce back upwards. As you can see in the aftermarket, the bid and ask is at bids at 9.8 and the ask at $10. Nothing is going on at the moment, but this is to me a great long-term play as EVs start to become more and more popular in the world and people start harping on climate change and trying to do better throughout the world. I think this will be a home run in the long-term play. Right now, their earnings weren't spectacular, but they did come out with great sales and a beat on sales. So they also estimated 65 million in revenue in Q3 as opposed to 60 mil. So that's a big jump for them as they're looking to make a breakthrough with their electric vehicle trucks. So I'm definitely going to be paying attention to this as I would like to get into it for a long-term play. And like I said, as long as we break over that resistance of $10.50, $10.38, this this could really push backwards up to, let's say, if we push back up to this $11.50 mark, we could definitely see pushing higher to around the $13 before actually staying pretty consistent, and more investors see that opportunity. Maybe Q3's earnings, maybe that will be a strong indicator if they have back-to-back strong quarterly earnings with strong growth numbers, and as well as they cut back on some of their expenses. But we'll see what will happen in the near future. So that's all I got for you today. Hope you enjoyed this and learned something. As tomorrow, I mean, we could see a red morning until the data comes out, and then depending on what the data is like, we could either see flashes of green or we could see a slight pullback as the markets finally take bad news as bad news and not turn it into good news and run away to all-time highs again. So definitely looking forward to it. I'll be back tomorrow morning. Thank you for tuning in to the Big Long. Leave a thumbs up. Have a great night.